Fun.
So, hello everybody. Today, our guest is Hugo Navarro, and we will be talking about Pharmx Technologies, which is trading on the Australian Stock Exchange with the ticker PHX. So, before diving deep into the company, let me first, Hugo, can you present yourself?
Hey,
Who are
Kevin.
you? What are you doing? Are you writing online?
Yeah, yeah, sure. My name is Hugo Navarro, as Kevin said. I'm the main writer of Undervalued and Undercovered. It's a Substack newsletter. I prefer to call it research platform because it's more boring than most newsletters. We mainly look for really small companies, small caps that have a large divergence between the price you pay and the value they offer, like classic early Warren Buffett style. I think you, Kevin, do the same. And yeah, I've come across Pharmx some time ago, and I think it's really interesting company.
And when you say we, is it you alone, or are you with some other collaborators, or?
I mean, from time to time, I do some collaborations and have some people helping me in the back, but sometimes most of the articles I write them myself, but I have some help in the back for other analysts I collaborate
Yeah.
with.
Yeah, so just to recall, the newsletter is called Undervalued and Undercovered, and I will put the link below the podcast afterwards. Yeah, so for those who don't know me, Kevin, I'm a former nuclear process engineer, and I currently write two newsletters, 100 Bagger Hunting and Invest with AI. And I've also, just like Hugo, I own shares in Pharmx Technologies. So, of course, be careful because we are biased. And as always, this is not financial advice. This is purely for entertainment purposes only. Okay, so let's start discussing the company. So maybe you can start with like, what does Pharmx Technologies do? What is their
Sure,
business model?
sure. So I've been digging deep into the exchange model recently. So I think that a great way to describe Pharmex and where it wants to go is like a royalty on healthcare volumes in Australia, in
Oh yeah.
pharmacy volumes. I think that's a great way to describe it. You take a little percentage out of the overall volume. So, you know, at the current form, Pharmex is just an eddy gateway. For those who don't know what that is basically when two parties try to communicate with each other on the internet or in any sort of way that involves computers, like they need to agree on what's the medium on communication, like
Hmm.
what's the variables. That's an eddy gateway. Pharmex has established the language where that pharmacies use to communicate with suppliers and with wholesalers. So basically, this is a program that runs on the back end of the pharmacy system in Australia that basically has the communication, solves the communication problem that many countries and pharmacy systems have.
Yeah, so just to be clear, it's not like an Amazon where you have like an entire logistics department behind it. It's mainly software. That's
Yeah,
right, huh?
it's like a royalty. It's like capital light. You just provide like you can say like the pipes where the
Hmm.
whole system works. You don't run the logistics. You are just a system that everyone agreed on using, and that's why Pharmex is so unique. We can talk a little bit about how this started because it's really unique. When I say unique, you don't have to take that simple, because if you take out the rest at every other country, like the Eddie Gateway, a system like Pharmex, it is not owned by a private company. It's usually a joint venture between major suppliers, proof of sale, point of sales companies. Like it is basically just something that it was created for the industry to work, not
Yeah,
to
yeah.
generate a profit. And the same happened in Australia. Like this was a joint venture from the four major post providers, and it eventually, for basically chance, it became a private owned company. And that's why it's such a high quality business model, practically the only one you can find that has this type of monopoly.
Hmm.
So it's difficult in some sense to analyze it because you don't have other peers globally to take a look into.
Yeah, because if I remember correctly, in the past, you had those three or four big point of sale vendors. And at a certain moment in time, they said we need some kind of standardization or some kind of gateway or industry that facilitates the information flow for us, for all of us. And so they came together and they created Pharmx. It wasn't called Pharmx in the past, I think. Um, but their goal was not really to monetize the gateway directly. It was more like, okay, we need this as a back office, back channel, because they wanted to make money by selling their point of sale systems and their other
Yeah.
software systems. And that probably explains why, like, for example, for you in Spain or for me in Belgium, when you go to a pharmacist, the pharmacist, when he orders, he uses his point of sale system, but it usually goes directly to the wholesaler. There is no overall gateway behind it that connects everybody together. So,
Yeah, it depends. Like I've done some research in other countries, and some of them have that gateway, but it's like you know, is there are three wholesalers. The three wholesalers have different gateways, and they come together to put like the same one. But
yeah.
the objective always is like to make the system work. Like the thing that happened with Australia and what happened with other countries is like we are entering into the internet phase and we have like 50 systems and we need a way for pharmacies to like not get crazy and need to order from 50 different
Mhm.
places, and for us like we are going to get orders in 50 different formats, and that's really inefficient, and that's how many of these systems were put in place.
And how did the company got on your radar? How did you find it, or was there a
Yeah.
specific way that were you screening through the companies in Australia,
No,
or
yeah, I've looked at Pharmx in the past quite a lot of times. I read about it, the screen, the company, but it all seemed too theoretical. We could say I was not convinced. The valuation was not cheap enough for me. But then I came across a friend that was doing some really deep research. Then some of my research I collaborated with him to do it with some expert calls and things like that. And
Mhm.
once you understand more in depth the company, you realize that the narrative around it is really different from what's actually going on, and that's in a big part because we will talk later about the marketplace model. But due to some of the economics and competition concerns of the marketplace model, the management was not able to communicate correctly
Mhm.
what their intentions were. So you had there like uh, something that was really difficult to understand at the moment if you didn't do lots and lots of research, and you still have that impact at the current moment.
Yeah, yeah, sure. Yeah, maybe we can then we talked a little bit about the origin, but I don't think we need to dive too deep into the entire history. I think you wrote about it on your Substack
Yeah.
too. Yeah, maybe we can discuss more in detail the business model. So you already mentioned the gateway and the marketplace. So maybe we can you can expand a little bit on that and how it works exactly.
Yeah. Okay. So basically, the old model of Pharmex, how they make revenue, is like, let's say you are a supplier, you want to have the connection to all these pharmacies. So let's say you pay like $10 a year for every connection. It's around that 10, $15 per pharmacy a supplier is connected to. Like it's minimal. It's a
Hmm.
really, really small fee. That was the historical, and that the idea was just increase suppliers and increase pharmacies, so you get more connection fees. But what the management realized is that they have a big opportunity there, like to go to from this fixed fee to a percentage based model. Because if you take a look at any other marketplace or a network system, they charge much bigger percentage of the there are 23 billion Australian dollars that go through their systems. They currently make like 8 million. So it's like
Yeah,
nothing
yeah.
what they make out of the system, the volume that goes through them.
Yeah, I
So
think it's like
yeah,
0.035% or something.
it's
It's like
practically
extremely
nothing.
extremely low. Yeah.
Yeah. And that's the key around the thesis and what we should talk about a lot. It's the marketplace. What's the marketplace really? We had two versions. That's something not a lot of people understand. But we had the first version of the marketplace that was a complete failure,
Hmm.
and that was like you had like for the listeners to understand correctly how the pharmacy sector works in Australia is like you have the wholesalers, then along with the wholesalers you have the suppliers can either go through a wholesaler or sell directly to pharmacies. The bigger
Hmm.
ones sell directly to pharmacies, but overall most of them end up being they need to go through the wholesalers. So the idea of the first marketplace is that you have a lot of suppliers that are getting charged money to go through those wholesalers, and you have smaller wholesalers who do not get visibility compared to the larger ones. So the thing was, let us create a platform that where suppliers and smaller wholesalers can list their product, and then we become like a group that can get visibility and can get like these efficiency gains in order to get some volume through pharmacies. What was the problem there? That and this is why the history is really misunderstood. Is that was a huge threat through the main wholesalers, and it's a really concentrated market in Australia. They hold a lot of power. For example, you have it's Chemist Warehouse.
Hmm.
They are owned by a major wholesaler, so they are basically integrated. So half of the market, half of the pharmacies are from them. So it's really difficult to enter that
Yeah.
market. You compete directly, and therefore all of the communications with investors were not really, detailed. They couldn't give a plan of how they were going to market this and how they're going to price this, because it was just like saying to the wholesaler, yeah, we are going to take away your your
Your
your
margin, yeah.
your
Yeah.
margin, and
Yeah.
that was not and also it was not a good business model, because you just relied on wholesalers continue to use your system and continue to provide you with some data in order to compete with them, so they could
Yeah.
basically cut you in any given moment, and it was destined to fail. They couldn't get enough SKUs in order to make this worth it for pharmacies, and therefore, even though I recently spoke with the CEO, and he told me like the first marketplace they receive a lot of interest, like over 2,000 pharmacies, I think it was, like they were interested in entering the marketplace. But as they did not have the product range, it didn't go anywhere because they were not
Yeah.
able to service that. So that's where we arrive at the second iteration of this plan. And this is like they realize, okay, so we are embedded into the system, like we are the backbone. We don't need to become as visible as we thought. Like and the strategy now is like to they have uh, added new like data based offerings, like stock view, that allows pharmacies to know which products are in stock and which aren't. This is a very big problem of pharmacies. Let's say if you order 10 products, one will be out of stock. So the problem for pharmacies, without getting too deep, it's you have low price visibility. Like you might order something and then you don't know what that cost. And the second problem is that you might order something and you might realize 2 days later that they don't have it and they are not going to send it to you. And therefore, that's a big problem. They solved it that with some analytics and some database platforms. So that doesn't hurt as much the wholesalers, and it provides a lot of value
Yeah.
to
Yeah.
the pharmacist, because you solve a really big problem for them. So the thing here is, they have these really good database platforms. It's like an exchange. Like as all the volume goes through you, you have all the data of
Hmm.
what are these purchases, the stocks. So you create that data, and you can either sell that data as a SaaS business
Hmm.
or a data provider. But what they choose to do is like, yeah, let me put all of this data and all of these services into a platform from pharmacies, and through that platform we will list the a lot of products from these suppliers and these wholesalers, and therefore we will make more efficient the ordering system so that the wholesaler saves some money. They don't need to send people to the pharmacy to let them know about the offers. It's just the system becomes more efficient, and therefore if you charge a 1% take rate, it just um, it's net positive for
Yeah,
the
yeah.
industry, and it's not a margin killer for wholesalers.
Yeah,
So
because
that's
if they want to charge a take rate system, they need to be able to provide value to the customer, and the final customer is the supplier or the wholesaler, because the for the pharmacist he pays nothing.
yeah,
So if we do a recap, you have on the one side the gateway with a fixed fee system, and then you have the new marketplace, and I think they launched it in November of last year.
yeah,
Yeah. So the new marketplace is like with a percentage based fee, like your typical marketplace. Um, but like for example, the gateway itself, how important is it? Imagine that tomorrow somebody there's an outage in the gateway and there's no gateway for 3 days. Is that a problem?
yeah. I mean, that's a killer. Like I've done quite a lot of expert calls, and everyone agrees. Like when Pharmex goes down, like you can't order, like you need to go back to ordering through the phone, to ordering through
Yeah.
a fax. It's horrible, and that's also a little bit of a risk in terms of the thesis. Like if Pharmex, it has happened that Pharmex has gone down, but just like a few hours, something that's not really a problem, because you can just delay the orders a little bit, or order some things through the phone. But if it goes down for 3 days, like the big players might start to think, we might lose some money building this again, but it just doesn't make sense to rely on a single platform. We need to make our own, like take it back to us. As long as the Pharmex gateway works decently, this shouldn't happen. And it's a key priority for management. When I ask him about this, like the first priority in terms of engineering and building new stuff is ensuring that the gateway will work perfectly, like the maintenance before any growth and adding any new things, because
Yeah.
it's just so important for this to be reliable.
Yeah. Okay. And what about, I mean, in the headlines over the past few weeks, we saw all the impact of potential impact of AI on software companies. Now, Pharmx is also a software company, but
Yeah.
how do you look at this from that point of view? Is AI a problem for Pharmx?
I mean, here the thing is like, uh, for those who know a little bit of software, an eddy gateway, it's really simple to make. Like it's
Hmm.
just it's this is overly simplistic, but you just need to add like the variables you are going
Hmm.
to make the order with. The problem here is to get everyone to agree to use the same variables and get everyone to use the same system. Like everyone uses Pharmx. Like you have the competitor that is MadeVUX. The thing here is, apart from that, we need to add an interesting factor, is that NDSS orders. This is like a Australian like diabetes national program that basically subsidizes the insulin and diabetes related products. You can only order these if the pharmacy has Pharmex, because it's embedded through them. They make like the check that everything is okay. So you have
Hmm.
this competitor that is MidVUX, that it has a pretty big problem, that it is not in all of the systems. It is basically only in the ones from Fred IT, that is the parent company. So it's kind of a trap because yeah, you have 20% market share, but it's from your parent company. So it doesn't really
Yeah, yeah, yeah.
work. You have not you have not accomplished a penetration into all the systems. So even MedVUX, if you look at their documentation, they say that they will not be able to to help you order through everything. Like you cannot order like the NDS thing you cannot do with with some major wholesalers that they are not completely integrated. So it doesn't make sense to only have them. You also need to have Pharmx, and it doesn't make sense to have a double railroad. We could say you only need one pipe. You don't
Yeah,
need two. It's
yeah.
just more inefficient to have one to have two than to have one.
Yeah, and we didn't mention it, but Pharmx does cover almost 100% of the
Yeah,
pharmacies in Australia and New Zealand.
yeah,
So it has nationwide coverage. I think it's the only one.
yeah,
Um, and yeah, on the positive side, it's a competitive advantage if you are the only one that can provide diabetes-related medication through the Pharmx system. Of course, I can imagine that a competitor like MedView will try to also get into the diabetes scheme so that they can also offer the same medication in the future. But that's more like a risk for the future. And even if they succeed, they only cover a very small part of the pharmacies out there in Australia. So
yeah. And apart from that, it just doesn't make sense. Even if, for example, MedVux already has like 50% lower cost than Pharmex, and
mhm.
they have 50% lower cost, and they offer higher rebates. Like something to understand is like as Pharmex gateway is embedded in the point of sale software, and around 90%, 20% of the revenues goes to the POS
Mhm. To the
software,
vendor. Yeah,
to a vendor. So MedVUX offers higher rebates, a lower and 50% lower price. So basically, to match Pharmex, they will need to offer like 40% rebates,
yeah, yeah,
which is completely crazy, or even higher than that. If to provide even a better solution, if you charge 50% less, you have to offer 40% just to match. Like
yeah.
you are unprofitable. You are highly unprofitable, and it just doesn't make sense.
No, it doesn't make sense in the sense that I think MedUX is owned by Fred IT,
Yeah,
and it's not the only business they have. They
yeah,
try to keep some sort of gateway going to have an alternative to Pharmx, but it's not the main source for their business. It's not where their profits come from.
yeah,
And as opposed to Pharmx, this is their main business. This is their only thing they do. So there is an additional focus on that part. Um,
yeah.
maybe,
And Fred AT also was not far along acquired, but by an even bigger company. So it's
yeah.
the MedVux is such a low priority on a think it's a 50 billion company, the parent one of the two.
Yeah, okay. And we talked about Pharmx and we talked about MedView X. Are there other competitors in the marketplace in the industry at the moment,
Yeah,
or?
you have on the marketplace side, like it is Directo. Directo is a competitor of the older marketplace, we could
Mhm,
say, and not on the newer side because they don't offer the new database tools. But something when I talked with the CEO recently, he the by the way the the recording of that call I will publish it soon.
mhm.
Along with this podcast, they will be able to watch that. So he directly said to me like either because Directo is their competitor, but it's also their customer. They use the Eddie Gateway.
Mhm.
So they said to me either we will join Directo, like they will go together, or they will stop having them as customers. Like
Yeah,
a polite way of saying that they will cut them out of the system. So the very an interesting thing about Directo is that they have as customers like some of the major wholesalers. Like And this validates the thesis that something like Pharmx, the supplier portal, can be embedded with major wholesalers just because it makes ordering more efficient. Like you have already the proof
Yeah.
of concept that this works with Director. And also, like if they acquire Director, they will be able to have directly, they will integrate those big clients into them and maybe just source more volume. So that's really interesting. Let's see how that develops. But I think it's a really interesting thing for the next maybe 12 months.
Yeah, maybe we can talk about the market potential then, because we both have written about Pharmx in the past, and we did some estimates on how big is the market for them, what kind of revenue projection can we make into the future. And one of the things we both did was in the past is to separate a part of the wholesaler market by saying, yeah, it's probably not feasible for Pharmex to attack that part of the market because the wholesaler will never release its margin. Now, maybe with the new information about Director,
Yeah,
there is more potential. So maybe you can talk a little bit about the future
yeah.
market
So
potential.
for me, yeah, to be really conservative, my addressable market for uh, um, pharmacies is like first on the pharmacy side, you have like half of the pharmacies that are either franchises from one of the major wholesalers, or there are Chemis warehouse, which is also its parent company is a major wholesaler.
Mhm.
So those, being conservative, are not accessible. Like if we take into consideration that Directo has been able to carve out a niche there, they could be accessible in the future, but I assume yes,
Yeah, sure.
they are not right now. Then like we've left like 50% of the market from some other franchise chains and some other independents. Like that's half of the market, but it's less of the ordering volume because Chemis warehouse are very big pharmacies. So let's say we have left like 35-40% of total volumes. From those volumes, you can take you Pharmx targets the cohorts of pharmacies they are trying to sell the pharmacy portal to, or
Mhm.
not sell because it's free, but to have them integrate the target 80 to 90% of of volumes through them, but being more conservatively and assuming like a big part of prescription medication, you will just keep ordering through the wholesaler because it's really low margin
Yeah, yeah.
medication.
Yeah, and the
So
basic and just to emphasize, the basic idea is that if you want to go through the marketplace with a percentage fee, the pharmacist needs to use the pharmacy portal.
yeah,
If he uses another way, or maybe like his typical POS system, which goes directly to the wholesaler and still flows through the gateway, but goes to the wholesaler, it will not be percentage based. That's right, right?
well, can you repeat that, please?
Yeah, if the pharmacist orders a medication with his classic point of sale system, and it will flow through the gateway, but it will not go over the marketplace, then
Yeah,
of course
yeah.
it will not be percentage based. It will not. They will not have to pay a percentage fee, the wholesaler.
Yeah, I mean, they still to detail that, but from my last conversation with the CEO, they get the percentage based fee. Like every deal is negotiated differently with
Okay.
suppliers and wholesalers. So on the, I think it ranges from like 1 to 5%. Like for example, if I have a deal with L'Oreal, because their products are so high margin and they are not as big, I maybe can't get them to accept 3%. But for example, with TH2 or Paragon, that they have a deal with them, it's probably closer to 1%
Yeah, yeah,
because
yeah, sure. But this
they
makes
just
sense.
provide
Yeah.
so many SKUs.
It depends on the margin that the supplier has.
Yeah.
Yeah, the higher the margin the supplier has, normally the more they can ask or try to negotiate for their own
Yeah, and
benefit.
also the high, for example, on these branded products, like you have a lot of people that go there like to sell the pharmacy. If you have like that, you can show the deals in the pharmacy portal, you save some of that cost. So you are actually saving them of money. For example, of prescription medication, the supplier portal outside of, for example, tools like buy it, no, buy it right now, the stock view, things
Hmm.
like that. You can route through that, because
Yeah.
you can just check the stock view, see that there's certain stock, and you automatically order through there without even noticing. But the thing here is you add less value through prescription medication, because they will have pharmacies will have order otherwise. But if you are able like to get a branded medication or skincare, things like that, if you are able to get them through orders there,
Yeah.
and also it saves some fees from the wholesalers, it just makes more sense, you provide more value.
Yeah, because we didn't talk about it, but there is and I think it's a worldwide trend. It's not only in Australia where a pharmacy is becoming more than just purely medication. It's
Yeah.
also about selling other products. It could be beauty, it could be vitamins or health in general. And that's where the opportunity lies, I think.
Yeah, you have more branded products, you have more, out of the shelves. It's just if those products are much higher margin, like food, not food exactly,
Hmm.
but this type of proteins
Yeah,
and vitamins, things like that. Those are something that people have shifted from going to those, the supermarket. The type of protein you might get in the supermarket might be lower quality, and
yeah.
also lower perceived quality from what you buy in a pharmacy. And people, they trust more the pharmacies, and that's a real trend happening there in Australia.
And maybe we can talk a little bit about the financials itself on a company, because I think if somebody would try to screen it, it doesn't look that great, the
Yeah, it
company when
looks
you look
really
in the
bad.
past. So maybe we can talk a little about like the balance sheet or how they allocate capital.
Yeah, basically balance sheet is they have a little bit of net cash position, I think,
Hmm.
but not material. And then revenues right now it's like 8 million, something like that. We are all talking about Australian dollars. So it screens expensive, like 10 times revenue.
Hmm.
But the story here it's about the you could say the future, this marketplace. We are valuing the value of this network, the value of this this transformation,
Yeah,
like making another similarity to an exchange type of model. Like for example, we had the Tel Aviv Stock Exchange that it went from just charging fees for transaction volumes to go more like software based and data analytics, and it made like that 10x over the
yeah,
past
yeah,
5 years. So this is the type of transaction we are trying to capture with
yeah. That's the
Pharmx.
mental model. Yeah, yeah, yeah. Or
Yeah,
the
that's
business model. Yeah.
yeah, and also the profitability looks less, because they are actually investing into building all of these things that are not yet generating enough revenue. Consider they've built the first marketplace that did not work. So
Hmm.
that's 3 years of having these engineers doing the first trial, failing for the first time. So it's difficult to screen this thing, and you need to look into the future. You cannot value it in current form.
Yeah,
It's a
yeah,
little bit
yeah,
what the risk is.
yeah. And I also had a meeting in the past with the CEO, and you had several meetings. What can you tell me about management? And the management team, is there like skin in the game? What are their incentives or their goals with the company?
Yeah, he doesn't have a lot of own shares. Like he
Hmm.
has some. He has quite a lot of incentives, like LTIs and short-term incentives, like stock options.
Hmm.
That's not the best, but it correctly incentivizes him in order to increase the share price and increase operating metrics. They've not disclosed the targets which are tied to the share awards. So I will be looking into the next report to see if they showcase something like that. But I'm not fully sure about how aligned is that Sarah award.
Mm.
Uh,
Yeah. I think more than a year ago, in their initial presentation, when they were talking about launching their first marketplace, they had like big goals. They aimed at like so for the moment, like you said, they had 8 million in revenue, and they saw potential to get to 300 million. And basically, it's just a percentage of the entire 20 or 23 billion
yeah,
Australian dollars that flows through the system. Did management hint at any other type of goals now? Have they reduced maybe that? I mean, the 300 million, I think it was very optimistic.
yeah.
I'm not saying it's not possible in the very long term, but what do you think about the potential at this time?
Yeah, for me the potential here is the thing is it has shaped, the history has changed to be like create a new wholesaler, like a digital wholesaler. Like you don't have the logistics to do that, so it's practically impossible. The old history was not the best,
Hmm.
but right now this has changed into just make ordering more efficient and take a small fee. So the in terms of generating revenue, this comes rather because the system is already in place. They have like 80 something percent of the SKUs pharmacies usually order. So they already have in place the catalog for pharmacies. The system is really great. You just now need to start going pharmacy for pharmacy, with a salesman, with a person, and taking them through the process of integrating this into the workflow. So
Yeah.
this might be a little bit slow. For this year, they target 200 pharmacies, small pharmacies, like 2 million average ordering volume. The average ordering volume countrywide is like 4 million. So these are, small independents
Hmm.
that are easy wins at the beginning. So the thing here is if you start with 200, you get like half of their ordering volume, which is conservative in my view, especially for independents. That's around 100 million. With 1.5%, we might be already looking for this year into 1.5 million in revenues.
Yeah.
Oh,
From the marketplace.
yeah, and as you start to increase and have more and more pharmacies, like 200 more each year, because sustaining the ones you already have integrated is not really a big spend of time. So you can just add more and sell more. So once you start selling 200, you add another 200, it compounds really quickly. And these pharmacies, it has that network effect. Then you start adding more SKUs, and you can add more wholesalers and more suppliers. They can order more through you. You actually have more data, you have more control, you can offer better services. So it's really a network effect.
Yeah, yeah, because I can imagine if, for example, let's say the first big wholesaler or one wholesaler makes the jump to start selling some of their SKUs on the marketplace. And because of all the data integration, data analytics, and all the information or the value added that the marketplace gives, if that wholesaler suddenly gets some sort of a small competitive advantage compared to the others because it's selling more on a marketplace, then it makes sense that the others will say, well, maybe we need to try this out also because they don't want to get left behind if it
Yeah.
actually delivers on the value.
Yeah, in a ways that many wholesalers, a big part of their own revenues, like it's like the thing with Australia is that it's the land of the monopolies. Like they
Mhm.
are really concentrated industries. Like you have two airlines, like you have two supermarket chains.
Yeah.
You might have like the only thing you have a lot of is like mining companies. uh, but you have a lot of wholesalers who also have like franchise pharmacy chains. So a big part of their ordering it's from their own pharmacies. So what is Pharmx doing? When I asked him the CEO about this, is they are already talking with some of them, and they are creating like systems specifically designed for these chains in order to it goes back to the same thing, make ordering more efficient.
Yeah.
You have like you already have the big advantage that you have the gateway, you have the data, so you can just improve, tweak the gateway to make everything more efficient. So you might get a smaller take rate from these major wholesalers, but as maybe a 0.3%, let's say.
Yeah. 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 Yeah.
It's
Sure.
still a lot from like 10 billion in
It's
volumes
still
that
a
were otherwise inaccessible.
Yeah, it's still a factor 10 difference between the fixed fee structure. So yeah, I guess it's some sort of a win-win situation where they try to create something of value that brings value to others, and then they can of course get their own value by charging a higher fee. Um, Now we discussed about the market potential. What are the biggest risks for Pharmx going forward? Like the downside risk? What are we looking at?
I mean, the on the bear side, on this thesis, I've told from some friends that also met with management that if this goes wrong, they will just increase the gateway revenues, like they will increase fees substantially,
Mhm.
and they will just cut headcount by a lot. So that's the main strategy. Not sure if that will work, how that will work, but in that case, we will be looking at maybe a 2x from here in terms of revenues in some years as they start to increase fees, and they can maybe reach 40% EBIT margins. So
Yeah.
it could kind of limit our losses in at the current valuation because you are start making substantial EBIT.
Mhm.
On the bear side, the biggest risk is that if you try to do this transition into the percentage-based model and it doesn't work, you might not be able to go back. So in that case, we might be looking at a really big ugly loss, or maybe even complete loss of principal if this
Mhm.
is not if this fails and it's not handled well going back into the old model,
Yeah. Okay.
especially with the limited liquidity of the stock, we could see a big drawdown. So the setup is not risk free.
Yeah.
We are talking
But
about an Australian microcap, so I think that's a little bit
yeah, sure.
refer to the
But
disclaimer. Nothing is investment
yeah.
advice. Uh,
Yeah, sure. But they already, because they, like you said before, they launched their first iteration on the marketplace in February of this year, in 2025. And then they saw that it wasn't really working as intended, and they started iterating and then launched their second version of the marketplace in November. But I do think that it shows that if, for example, this second iteration doesn't work, they will have the choice to like revise it again and launch a third one or stop. But even if they stop, yeah, like you say, they can like reduce software development headcount, and they could just go back to the gateway, because the gateway, as we all already said, is mission critical. So I do think that the risk where the marketplace fails completely and then they're stuck, it seems low.
yeah,
It
and
seems like they can also always go back to the standard gateway protocol.
no, I mean the thing here is on the in the first iteration they were not changing like the contracts. Like no, the new clients they are signed is all focused in this new percentage based
Yeah,
model,
yeah,
which is great for the bull case because it might signal that we are close to a breakout in terms of revenues from that path. But it also means like if you are closing that, you need to renegotiate that to go back to the gateway fee.
yeah, yeah,
So they have two growth levers right now. One is getting more revenues through the pharmacy, like ordering more through the pharmacy portal, and the second way is like the other main focus is like connecting to more suppliers and connecting to more
yeah,
pharmacies.
yeah, yeah. Expanding the market. Yeah. Um, yeah. So what does the what for your when we talk about valuation, how do you? So we already talked about the fact that valuation based on the past is very difficult. The only thing we can do is like And that's basically what we always do is try to guess what a probabilistic future outcome would be. So I think I'm not didn't check the price this morning. I think it was trading at like 0.13
0.13 or something like that. Yeah.
Australian dollars. So what's your estimate or the most probabilistic outcome from a valuation point of view? Where do you see Pharmx being in like a couple of years?
For me, I've looked a little bit deeper into that. I made a valuation model. I published that in the deep dive I made, but a little bit, I think they can increase like 5x the
Mhm.
revenues around that, making this transition over the next 5 years. And I think they can earn like margins in the range of 40 to 50% EBIT, even considering I consider that they will double the number of employees, and the cost per employee will go up to like 230K salary per employee, which is pretty high. So the thing here is, if you have a company that's basically exchange economics. Uh, the name of the company is Pharmx Exchange. So I
Yeah.
take a little bit of a similarity to a exchange. The wood ones not in emerging markets, because like emerging markets, they at a discount. They trade at around 15 to 20 times EBITDA. So I think Pharmx could trade at a valuation similar to that. Especially what I really like about Pharmx is it completely uncorrelated to what happens in the economy.
Yeah.
It's like it's a royalty on healthcare, and if healthcare is a great sector on with whatever happens, especially on the pharmacy side, pharmacies are not really disrupted by any economic event. Maybe you get a reduction of 5% in the worst
Yeah,
case.
yeah, sure.
But that's just 5% of revenues. As you have really high margins, it just doesn't affect you as much in terms of marketplace. It's a really good royalty model on a really defensive sector. So it might even command a higher premium than that if they are able to show further growth, or they can hike the percentage based fees. So for me, it's like 15 to 20 times EBITDA multiple. They can reach probably 20 something, 28, 25 in EBITDA in something like 2030, 2031 if this succeeds. And they should be able to signal further growth from that point. So this could be like a 5 to 7x
Yeah,
in
yeah,
terms of the upside potential, with further upside of being a longer term compounder.
yeah, sure, sure. And do you have any specific expectations for 2026 for the company? I don't know if you have a discussion about that with the CEO, but like in the short term, because I do think if somebody is interested in this company, it takes time to put the marketplace in effect. It won't happen tomorrow. So I don't know if you have any insights in 2026 and how it will
Yeah,
evolve.
I mean, obviously, I talked to the CEO not long ago, and the results will be out in February.
Yeah,
So not a lot was discussed
yeah,
about that.
sure.
In my view, the half year results, it's like these ones will be from like I think July to December. So I don't think we will see much more of a difference on the financials, but I think know that the marketplace model is different, and explaining it to investors doesn't mean that wholesalers might feel threatened. I think they have the possibility to explain this to investors, and that way we might have a neutral effect. I don't have a view on next half year results.
Yeah,
Probably the next 12 months, we could we could see revenues of the marketplace surpassing the 10% threshold, and
mhm,
therefore being reported on a standalone
yeah,
basis. And if we have like 1/2 year that it's like 50% of revenues, we could see a good reaction on the share price, maybe going like 120 million market cap. That's some good upside. So over the short term, most of the revenues and most of the stock price appreciation might be just due to a little bit of hype, because
Yeah, sure.
there's a lot of funds and a lot of investors, institutionals, and some private people I know that they are waiting for this theoretic
Yeah.
equity history to be shown on the numbers. So once you get that and you start to understand better the unit economics, because right now the main thing here that changes in terms of the history is you go from creating this marketplace it was more like a marketplace to now something that is more unit economics, like each pharmacy you get them to order, it creates some extra profit. It's much better to understand how to model and to make sure that if it has worked with 200, it will work with the next 500.
Yeah, sure, sure.
So it's really it's I think the market will over the next 12 months starts to extrapolate the current growth, and the valuation will get a little bit higher. I mean, it all depends on how we are in terms of market sentiment, but yeah, I think over the next 12 months, it presents an asymmetric risk reward. But over the longer term, it's when it becomes much better setup.
Yeah.
I wouldn't bet the everything in the next 12 months. I think it's a long-term play.
Yeah, I agree. But the only thing I would mention is with the old marketplace, I did the calculation myself in the past, and they were barely at 5% of total revenue with the old marketplace.
Yeah,
So, as you say, one of the biggest indicators is if they have a marketplace that gains traction, they should at the minimum see that 10% threshold beaten during the year.
yeah.
Because
For me,
if it takes too long, then that means that there is, I mean, it's a bit like in a startup. That means that there is no right product market fit. So maybe they need to do additional tweaking, or maybe it's just not catching on. But
yeah, I
if
agree.
in 2026 we don't see a significant revenue increase above the 10% for the marketplace, then there could be a problem.
Yeah. So
Yeah,
in my view, it's like you have like 8 million. It's like 800K the threshold. So on that end, with 200 pharmacies, that is the objective. Like
hmm,
you need to understand is like it's on a run rate basis. They will have 200 probably at year end. So maybe we in the first half year of 2026 we just have 60 pharmacies like
yeah,
ordering. So I think the first half of 2026 might not show that yet, but the second half could start to show that.
yeah,
So I think that a reason why this opportunity exists is because the catalyst is uncertain
mhm,
over the next short-term period. But I think the long-term proposition is really good. And what I really like and what I've looked a lot in my current portfolio holdings is it's what they call independent trend player.
mm,
Like you have your thesis, you have your trend, and it doesn't depend if AI goes bust or if AI has, has
yeah,
a
yeah,
home
yeah,
run or if X commodity goes through the moon. It offers really good correlation. So I have
yeah,
multiple setups like this in the portfolio. So the risk reward is pretty good. The downside is on the long term pretty cap. On the short term, this is liquid. If someone sells uh, 3 million of these and there's no buying, this could go down 30%.
yeah, sure.
Some months ago we had like a fat finger that in a single day went intraday like 40% up,
Hmm.
because someone just put a buy order without the limit. So these
Yeah,
things happen.
yeah, sure. Well, do you have any other things you want to mention about Pharmx? Can we wrap it up?
Yeah, I think that the main things to look for in the next 12 months is how the management starts to explain the model or their go-to market, like their selling proposition to pharmacies, if they are coherent with what they are saying, because in the past they have been a little bit of bad communication. If they start to be more clear with that, if they start to report more metrics, and just wait. For me, we have to wait here. Bear in mind that you need to position carefully, understand that this is on the riskier side for most people and most portfolios.
Mhm.
It depends for people that invest professionally. It's different. If you are institutional level, you might need to take some time to build a position.
Yeah.
Don't feel in a rush because you can get the share at decent prices. You don't need to go into a rush. So be patient, continue monitoring what the management is saying, what the pharmacies are saying, and just check around that. And I think the director thing could be key. Like that's something that could be an amazing catalyst over the next 12 months. If they acquire or match with director, the share price will probably go quite higher, mainly because you will have as customers the major wholesalers as you
Yeah.
acquire director.
Yeah. Yeah. Not only because you remove a competitor from the table, but also because you acquire their existing relationships, and apparently they're already there with the wholesaler. Yeah.
Yeah, yeah, completely agree.
Okay, well, thank you very much, Hugo. For those listening or viewing, you can check out more about Pharmx on Hugo's Substack, Undervalued and Undercovered, or on my own Substack on Hunter Hunting. Thanks a lot, Hugo, and we'll need to do this another time, maybe on another company in the future.
Yeah, perfect, Kevin. Bye
Okay,
bye.
bye.